Dear chartered accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant.
Daily news and updates for 24th October 2023. In a notable crackdown on GST evasion, the Directorate General of GST Intelligence in Ahmedabad has made staggering allegations of tax evasion amounting to Rs 1.2 to Rs 1.5 lakh crore against shipping liners, according to sources familiar with the matter, as per a reliable news report. The shipping liners in question have reportedly presented a detailed representation to key authorities, including the Finance Ministry and the Central Board of Indirect Taxes and Customs. They are actively seeking a resolution to the allegations. However, DGGI asserts that these shipping liners are involved in tax evasion by operating through a branch office in India while failing to pay taxes on imported services from their head offices located abroad. These shipping liners are channeling their operation expenses, which include lease rentals, fuel charges, and crew expenses, to their overseas head offices without billing the branch office in India for these services. Under the GST law, any business entity operating both in India and abroad is treated as a separate legal entity, and any service provided by the head office to the branch office is considered a supply even when it involves no financial transaction. According to sources, the GST law deems any import of services to be taxable, regardless of whether these imported services are provided without any consideration. Larry Fink, the world's biggest money manager with over $9 trillion in assets, was in India for a whistle-stop tour last weekend to meet business partner Mukesh Ambani. Fink and RIL chairman Ambani also met Prime Minister Narendra Modi in New Delhi. In Mumbai, Fink, among the most polarized figures in corporate America on account of the backlash against ESG, visited the sprawling Jio campus in Navi Mumbai and RIL's high-end retail hub in BKC and met the senior leadership. This is Fink's second visit to India in recent times and the first after Jio Financial Services and BlackRock announced their asset management JV in July, less than a week after Jio Financial Services demerged from RIL. The plan is to launch a digital-first asset manager aimed at serving the rising investor population in the country. Each partner had announced plans to invest up to $150 million in the 50-50 JV. Torrent Pharma's attempt to acquire the stake of the Hamid family in Cipla has hit a roadblock due to differences in valuation. Talks between the two parties have been suspended but may resume if they can agree on a valuation. Other potential buyers have also been deterred by the rising valuations of Cipla shares. Torrent Pharma had been working on a $7 billion acquisition financing package for the deal. On April 28, 2022, the RBI concluded a sell-buy foreign exchange swap under which banks bought US dollars from the central bank and simultaneously agreed to sell the same amount of dollars at the end of the swap period. The maturity of the swap, which was due on October 23rd, would have released around Rs 40,000 crore into the banking system as purchases of dollars by the RBI inject rupee liquidity into the banking system. Tata Passenger Electric Mobility Limited, the electric vehicle arm of Tata Motors, will start selling electric vehicles through dedicated sales channels in select cities. The company also plans to produce internal combustion engine models and electric vehicles at its Sanand plant in 2024. The company acquired Ford India Sanand plant in August 2022 and aims to stabilize its operations before expanding further. Reliance Industries Limited and the Walt Disney Company may face a hurdle in striking a deal for the American firm's India operations owing to the wide gulf in their respective valuations of businesses. While RIL values Disney Star at $3 to $4 billion, Walt Disney is reportedly eyeing a valuation of $10 billion. For small and medium enterprises looking to list on the stock exchange, there was no better year than 2023. In the current calendar year till September, as many as 135 SMEs launched their initial public offers while collectively raising nearly Rs 3,500 crore, a record in terms of cumulative fundraising in a single calendar year. The previous high was Rs 2,287 crore that was raised through 141 SME public issues in 2018. While there is a significant traction visible in the SME IPO arena, with most issues seeing huge oversubscription and listing gains as well, there is another trend that has caught everyone's attention. A trend that is in many ways quite worrisome as well. An analysis of the anchor allotments of various SME IPOs shows that there is just a small pool of entities, both domestic and foreign, that features regularly in the list of anchor investors. Data from Prime Database, a primary market tracker, shows that entities like Rajasthan Global Securities, Chhattisgarh Investments, LRSD Securities, Nijan Undiscovered Value Fund, Moneywise Financial Services, Bengal Finance and Investment, and Autumn Investment in Infrastructure are part of the anchor allotments in many SME IPOs in the recent past. To be sure, there is no regulatory issue or violation in bidding for the anchor portion of shares in an IPO, but when the same set of investors feature regularly in many IPOs, it does raise concerns, especially when market participants say that the SME platforms are maturing and attracting newer and bigger investors.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.